biggest decisions you'll make as a retiree is figuring out where to live. Possibly you want to move closer to your grandchildren, or maybe live in a resort-style 55-plus community, or maybe you just want to move to free up some money so you can plan for your future retirement. Whatever the case may be, it can be difficult to borrow money once you retire. Once you retire, you don't have access to the full income you earned when you were working. This makes you a riskier candidate for a mortgage loan. Now, it is possible to get a mortgage once you quit working, and the qualifications are pretty much the same as if you were working. Good credit, steady income, low debt to income. All of those things will be required whether you're working or not.
Working or retired, what's the difference?
Is proving income. Now, if you were working, you'd provide a W-2 and a paycheck stub. However, you're not. So, banks are going to be looking at your retirement income a little differently. Now, if you're retired, your income probably comes from a variety of sources, like Social Security, 401k, IRA, pension. Now, some of these income sources are considered finite, which means they depreciate over time. And this is the primary concern for most lenders.
Therefore, the mortgage lender is going to be doing some math to see how long your 401k or brokerage account will actually last. And most lenders will only use 70% of the account balance for its calculation.
The bottom line, lenders are more interested in your ability to pay back the loan, not how much money you have in the bank.
So let's talk about acceptable income for qualifying. Lenders accept Social Security. It's treated just like regular income. Mortgage lenders consider spousal support or survivor's benefit as limited source income. You'll have to prove you're getting it for at least 3 years. Pensions are considered regular income, just like the Social Security. If you're going to draw off of a 401k or IRA, most lenders will use these. However, they must last at least 3 years and they will only use 70% of the account.
Always remember that lenders consider Social Security and pension just like regular income. It's your 401ks, your IRAs, and accounts like that, brokerage accounts that get treated differently. It may be necessary for you to apply for the loan prior to quitting your job. In many cases, I'll have buyers earmark the home as a second home and purchase the home, get the mortgage, and then eventually move into the house, which is perfectly fine to do. And then after they move into it, they retire. If you're entering retirement age and considering a mortgage, it's a good idea to make sure you can answer the following questions.
Will your income decrease after retirement? How long will your income last? Are you eligible for tax breaks that will increase your income? How will your household income change if a spouse passes away? And are you comfortable incurring more debt?
Some of these questions you'll need to seek out a financial advisor to help you with them, and that's always a good idea. Now, I'd have to say, if I had to pencil a number, about 50% of my home buyers will pay cash. However, since rates have been rising as they have, I think that number has gone up. It's more like 60 or 65% are paying cash. But not everybody's comfortable doing that. They want to have cash on hand, and you may want to take out a small mortgage. So it's a good time to start thinking about these things if you're getting close to retire. What do you think? Would you take out a mortgage, or would you just pay cash, considering the circumstances we are facing right now with high interest rates? Let's make it a poll. Today is May 4th. Yesterday, Jerome Powell, our Fed chair, met and increased rates again. I would love to know what you think about that. As always, if you're on a PC or on a phone, make some comments below. Now, buying a home at any stage in life is a big commitment. So it's advisable that you speak to your financial planner before you jump in to buying a home and taking out a mortgage. Oh, and don't forget, if your credit's good, you'll probably pay higher rates of interest. If you're not aware of that, maybe check this video up here out, where I cover the new lending rule from Fannie Mae and Freddie Mac, courtesy of our government. Just FYI, lenders cannot discriminate against you due to your age. So you can be 99 and still get a 30-year mortgage. And if you want to, do it. Can't take it with you.